Hey traders, Crash Alton here on the 14th of March 2024. We're going to be doing a little training session with the Isnipe system. So Matt, I know you have some specific questions today, so this will be to answer whatever questions you have, but we'll record it so that other people can learn from it. So go ahead and ask your questions.
Perfect. So the question that I've got really relates to kind of the range-bound trading and what you like to look for when you're sniping off those key lines. I assume I kind of have some idea of what you most likely will look for, like for instance, the bull and the bear lines running horizontal, so you're not seeing that kind of vertical momentum one direction or another. But when you look to enter trades, are you looking at fractals to form, or if it's range bound, do you look for the price just to tag the line and get in? And then also profit target, are you looking typically for somewhere between 5 and 10 points and then you close out the trade? And then also, if you are going to snipe, I assume risk to reward is going to be a little bit more tightened, and as a result, do you tend to go more on the number of micro or minis, actually micros that you trade? Like you, for instance, do 10 to maybe 12 when you're sniping as opposed to trend following. So those are just a few of the questions.
Yeah, so great questions. All situational dependent. Let's start with the basics. Okay, so number one, we never know whether a market is going to be, trend up, trend down, or a more balanced two-way trade, right? You don't really know for sure. We do have an idea, a game plan coming into the day that will be based off of the cycle day. So the first thing I do is I ask myself, am I cycle day 1, 2, or 3? Okay, and then the second question I ask myself is, am I what intraday cycle am I in? So when I take those two into consideration, both the cycle day and the intraday together, all right, then I have an idea of whether it's going to be more of a trend type day or more of a sideways day. So for example, we know that on cycle day 2s, we tend to be more two-way trade. We know on Mondays and Fridays tends to be a lot of times two-way trades with, Fridays a lot of times having a major move in the afternoon, like maybe a Friday walkaway trade or something like that we might take into consideration. So number one, I try to look at that. Number two, I back that up with liquidity zones that I find on Bookmap. And before the market starts, I try to look at the major zones and see where they match with price targets that I have on the iStructure chart, right, for points of confluence. So the iStructure chart, as we know, will have, before the market starts, prices that are listed over on the right-hand side that will be targets that we will look for within our cycle time frame. So whether it's a spill to an AM high, to a lunch high, to a PM low, etc. So all depends on that. Then when I look at the line itself, the great thing about the Isnipe system is it'll tell you what it's doing, right? And so if you even have a game plan and it starts telling you something different, then you just go, oh, I guess that game plan's either working, or it's working early, it's working late, or not working at all. So in general, right, we're going to look at a couple things for entries. Number one, for entry, I always want to see a fractal, okay, that ends in the direction of the trend that I want to go, the direction that I want to go. So if I am selling short, for example, I want to see a fractal, right, develop within 3 points of the line. So just my basic going in rules, plus or minus 3 points of a line to see a fractal. If I am going down, if I think it's going down and I want to short, then I want to see the price come up, hit the line, develop a fractal either 3 points below, 3 points above, and then continue down in the direction of the trend that I think it's going to go, i.e. bear line, I think it's going to short. the vertical nature of the lines a lot of times will give you an idea, right, of the momentum and maybe how long we can ride that for. And then that also depends in the time of the day. We know that in the early morning, the first 30 minutes during this build time, we can have huge up or down thrusts. So the lines will be much closer together once that momentum kicks in. They'll be more vertical and they'll be more together. But we also know that in the first 30 minutes that we can have overshoots of the lines, which is why we put in our rules to be conservative in training Isnipe, that we wait for the first 30 minutes to really do much of anything. We have an absolute no trade zone for the first 6 to 8 minutes. And then if you want to play within the first 30 minutes, you got to make sure it's like a 20, right? Or a 31 is really what I like to wait for the first 30 minutes. After the first 30 minutes, so for me, Pacific Standard Time on these charts you're looking at today, 6:30 is the market open. So after 7 o'clock on our charts, then in general for the conservative approach, we're looking for the first touch of the 15, the 20, the 31, the 45, and then one touch of the 60. Now, as far as exits, so that's what I'm looking for to enter. As far as exits, we have two ways to really look at this, Matt. Okay, you either have the keep it simple version, all right, which is set your ATM to have target zones at 3 locations, depending on the volatility, the day it is, the day of the week it is, and the time frame of the day. So let's say we are in the morning when we have a higher volume, higher volatility, more thrust moves, then I would look for targets, if you want to keep it the conservative, easy way, for 8, 10, and 12 points. If it's after the first hour and a half, 2 hours of trading, after the European close, all right, or when we're getting into the lunchtime slog, SLOG as we call it, and everything slows down, we may have to change that from 8, 10, 12 to maybe 5, 8, and 10 points as the 3 target zones. Now, if you were advancing from beginning to more expertise level of scalping using the Isnipe system, then I don't like actually using, I do set the ATM up for it, but I spread the targets 1, 2, and 3 out a little bit, or if it's so volatile that it exceeds my targets, I will move target 1, 2, and 3 right away. My ultimate goal to maximize points is to always take initially, let's say I'm using 6 micros for an example, I will take target 1, so even if I have it at 8, 10, and 12, okay, I will move target 1 to be the ITS 4 line, okay? I will make target number 2 the ITS 6 line, and I will make ITS 3, or the target 3, the ITS 10, opposite 10 line. And I will move those, though, if I am able to, in order to maximize targets. So let's look at an example here. I'm just looking and moving the screen to find, after 7 o'clock, the first 15 that we can find. Okay, so in this particular example, we see right here that we have our first 15 touch of the bull 15 line, okay, over here. And I make target number 1 the opposite 4. So let's just assume I'd set it at 8, 10, and 12. Well, let's do a quick calculation. From line to line, if I exit at my first opposite 4 line, the bare 4 line, that's 10 points. So that's where I am going to actually target out to. As it moves ahead and comes up here to target 6, this is where I'm going to take the second target at. So I will take the next 2 off at almost 16 points. When that happens, I move my stop that was below here. We set a stop of 12 points, okay, or the next line. That's how we set this. That's my stop. As soon as I pass through this and I can see I'm coming up to the 6, I move my stops. Again, depending on the situation, at a minimum, I move it from the next line or 12 points below, and I come and bring it to break even. So even if it flashes down below me, I will never get stopped out for a loss because I've already taken money from the dealer at the 4 and the 6. So yes, I'll start off with an ATM strategy that's 8, 10, and 12, or maybe I make it 8, 10, and 15 to be safe because I'll have time before this actually pops up to move the one that's at 8, 10, and 12 at 12, target 2, right, which is actually right in this area. I will take it and I will then move it up here to the 10 line because I really want a particular in the morning when it's moving fast, the 15s, the 15s, the 20s, and the 31s generally will almost always go to the third opposite line, 4, 6, and 10. We will have some counter fluctuation to come down that you see here, comes up to the 6, it comes back down, but it never comes to the 15 in this case, and if it did, I would have my stop right below this fractal. So I said break even, but I actually make it right below the fractal. Because sometimes what they want to do is the algorithms are smart and they want to come down and try to stop you out. So if you raised your stop up to the 4 after you passed the 4, then you would have gotten stopped out when the algorithm comes down to try to take people's money because they know they raise stops as price goes up. So we want to be a little bit smarter than the algorithms, okay, and not let that happen. So I bring it to the next fractal. And so that's how I play the system to max points. And then what I do, depending on the time or the day or what I see on iStructure, let's just take a look at this. That was at 723 roughly. Okay, so let's just see where we're at 723 here to see if there's any points of confluence. We were at this point in time at this low, okay, which was an basically an up, down, up maneuver, and we were at major points of confluence with a bull bear line in the sand, daily low targets. The prior low was here. If you spread this out, we can actually see this a little bit easier. But we had daily low targets in here. We had the cycle day 1, which was right here. We had the 1400 close that was there. We had another daily low target. So you could see that we pulled back. We had points of confluence. In that case, all right, I would assume that we're going to finish the move up a little bit more. And so I would try to hold then this to a minimum of 10. But what I would actually do to maximize my points, initially I take target 3. As soon as if I have it at 8, 10, and 12, I move that 12-point target to here. How many points is that? Well, that would be from this line to the opposite 10. That's 26 points. So I'd move it to there. As price comes and starts clearing back above this, I might move my target up to the next line and then roll my stop up to, after it passes the 6 again, to the following 6. And you can see that now by this time we've developed the 4. I've developed the 6. So as I pass this 6, I then take my stop and I trail below the following 6 most likely. All right. If I see that it's going to start coming down, I'm not going to let it break. If it breaks much below this, then I'm going to get out. Okay? Because I'll just re-enter. And in this case, if I see a fractal with a 6 develop, I now have to make the choice. Am I playing the sniping game of the 4s and the 6s, or am I now waiting for the next level, which would be another 15, 20, or 31? So this is now, expertise, gamemanship, looking at liquidity zones, looking at market timing cycles, or other price structures that we have to know whether it's going to go up here. Now, let's say we just weren't really clear, and it came down here, hit the 6. We decided to take the first touch of the 6. Well, what do? Well, we have a 12 points. We have a what stop? How many points stop?
12 points.
12 points. So if you took that 6, and even though it bounced against you, went to the opposite 4, but our rules don't say it's always going to go to the opposite 6 or 10 when we're taking the 4s and 6. But because we're in an up thrust, and you can see that we have a big up thrust here, and then what we've actually done is we've created a channel, which is a flag on this side, right? So we're actually flagging down, basically, right? Flagging down, and then we're having a break up again. So if we can tell by technical analysis, by flagging down and then flagging up, and now looking that if you look here, we're actually building also, right, a kind of horizontal situation where we can see that we're kind of in and out of this rectangle, and now we're looking for a Wycoff Spring. So now I use my technical analysis of the channel breaking above it, coming back down, and then springing out of the flag pattern and out of the rectangle box. So now I know I've got a Wycoff breakout. I can then decide to add back in after I see the impulse move with a series of higher lows. Okay, a breakout here, green candles. I might decide to see, yep, I broke above the 4, I broke above the 6, I break above the 10. I'm going to maybe decide to leg in and chase. Doesn't quite follow our Isnipe system exactly. So you have to decide, well, am I going to employ other techniques in addition to the Isnipe system, or am I going to play pure scalping for dummies? If you're going to play pure scalping for dummies and play absolutely conservative, then you're going to wait for the next 15, 20, or 31 line. If you employ this kind of thought process to also looking at it, and you can see the candles as they flag down, turn from green to yellow to red. We start getting a little bit of blue and green in here as we come up to the top, all right? And we have a little peekaboo, we come back down. We have this line right here that ends up providing some support for us, and we can kind of see almost a little bit of a inverted head and shoulders with this Wycoff formation. So now maybe we say, I'm just going to add here, and I'm going to take 8 to 10, 12 points, or 8 to 10, and raise my stops on that last one and continue to chase it up. If you did this, you would also see that you had the 4 and the 6 lines develop again as you Wycoff Spring out of this. So now you can say, okay, now I'm going to look for the first pullback to the 6. In this case, if you're waiting conservative, you're not going to do anything to the 4 because you really didn't have an opportunity to. You could say that this is the impulse move that takes us out. Now, this is like true expertise, technical analysis in the heat of the moment, that this is an impulse move that springs you out of the Wycoff consolidation rectangle area. I hit it, I do one pullback, and I'm off to the races to finish the next part of the impulse move. If you're good enough to do that, you could sit here and then take this particular entry right here, or you could have taken the breakout entry right here, or if you want to do the conservative approach, but one notch more aggressive than the conservative 15, 20, 21, you could say first pull back to the 6, and then see if you can ride it up to the next line. So that's kind of the thought process on how we trade. So number one, you got to ask yourself, am I only going to play conservative or not? If you've gotten to the point where you can play the 10s, the 15s, 20s, 31s, 45 and 60s, and you're able to see this, now you say, can I see the technical analysis that we just discussed? Have I already made money off the dealer up until this time, which is an hour into the market? Do I have a little bit of extra play money to go ahead and roll the bones and still do some technical analysis, but maybe chase it here? But it's not a complete chase. It's a chase if you're talking about pure ITS lines. But in this case, this is actually a breakout play. So again, I hope that makes sense to answer, just to recap though, the entry is plus or minus 3 on the fractal in the direction I'm looking for. And then it's always, for me, it's always the opposite if I'm playing the conservative lines. I'm not talking about 4s and 6s or 10s, but off of the 15s, the 20s, the 31s, the 45s. My target number 1 is the opposite 4. Target number 2 is the opposite 6. Target number 3, I put it at the 10, and then I'm willing to move it up as I raise my stops to let it run as long as possible.
Gotcha. Quick question on the like 4 and 6 line. So I thought I heard you say something in the beginning where, depending on how vertical they are, does the length of the line, so we'll use the example of around the 728 time frame when we were coming out of that Wycoff Spring. We've got the 4 and 6s that develop. They run vertical for nearly 3-4 minutes. Does the length with which that 4 and 6 go vertical give us an indication that the bounce at the first 4 and 6 is probable because of that specific length of time? Does that make sense?
Let's find an example. I want to make sure I actually understand. So let's maybe find something where it goes vertical.
So
do you remember a time from...
Where we were was so where we were was a good example coming out of that spring, that Wycoff Spring.
Okay.
So right there at the 728 to 29 level, where that circle is with the arrow.
Uh-huh.
So you see how the 4 and 6 are developing. Below that, they're going vertical, and they run vertical almost all the way up until we get to the bear 60, I believe.
Yep.
So because of how, since it wasn't a short duration of time, it was a longer duration. So we went from, say 728 all the way, they didn't start flattening out until about 732. Because of how long that impulse move was, does that usually give us a good indication that the first touch of the 4 or 6 is likely to bounce because of how long and extended it is?
Yes. So a two-part answer to that question. 3-part answer to that question. Okay. The first one is, if you get a Wycoff Spring out of a rectangle formation that's kind of flagging down, and you have this breakout, it's got to be a pretty good impulse move, right, to get you out of there, because we've been basing. We've been kind of flagging down, basing, and then springing out of that Wycoff. So now you're thinking, okay, that's got to be a pretty good move that's going to initially take me out of that. So I'm going to expect that I'm going to have some kind of small retrace after the impulse move. Now, what we have to our advantage is that when the impulse move occurs here, okay, we know that we have another structure point here, which is totally to our advantage. So we can sit here and say, man, here's a 15 line, or is this the 20? This might be the 20. Here's the 20 line, right? So guess where we got that pullback? 15 points later, impulse move, slight retrace, and then continuation of the flag pattern. Of the impulse, right? So just a tiny A, B, C type pattern. Matter of fact, let's just look at a price projection. So if we go A, B, get right on there, C, our 100% of the APC flat impulse move is right up here at the 60 line. Where do we come? Oh, I mean, not exact, but I mean, that's pretty doggone good technical analysis to know that our structural setups help us to identify things that are going to happen. We have the 20 here, which we know is going to cause some kind of reaction. It may not be, and remember we talked about this before, one of our previous videos that we recorded. We saw that there was a time when we were not going to take this 20 because we were new, it was the exact same situation. We were coming out of a consolidation period with a Wycoff Spring, and we were like, we're springing out of this with an impulse move. We saw the lines really vertical and close together between the 4 and 6. We're like, we're not taking that because it's going to go higher. Now, that's part 1 and 2 to your answer, right? We have structure. We have coloring of the candles, which is 2. We can tell ourselves one more thing, which is part 3, and that is this. what time is this? Because you're a student of this, a beginning student of this, so I know you don't know everything. But tell me what time frame we are in right here as we're flagging. Where are we at between? Let's put it this way. Where was the spill?
The spill was down, or no, spill was up on this day.
What day is this?
Right.
14th? You weren't actually trading today, so you're not.
Yeah.
You weren't
It
actually.
looked like from the open, the spill did move higher before it started to drop.
Yeah, we actually had the spill down right here on the ice structure chart.
Okay.
And then we're looking at the 728 time frame. All right, so we're going to the AM high. Okay. So that was at what time?
Yeah, 7:35.
7:35. So over here, we're 7:35. So right there, okay, ended up being the AM high according to our NAVDAR system. So we were looking for a move to finish the AM high within our time window for today. It happened to be 7 to 7:45 time frame, right? So we were looking for something inside of that window, and that kind of matched with a major resistance point. What else did we have up there? Well, let's look at ice structure and see if there was anything else. Well, we have the eagle line, right? We have VWAP, which is this dashed pink line. And we have Viper up here, and we have the... actually, that wasn't the prior close at the time. I think the prior close was down here. I can't remember off my head, because this chart's changed because we're now looking at the Globex hours. But you could see that, what do we know? That when the guns cloud ends up coming down, right, for over 100 points, what are we looking to do when that occurs?
Wait until it gets up to at least the eagle. Well, depending if it's a DOS setup, we could be looking to take.
Okay, but this is but this is not the time of the DOS, right? DOS happens later in the day, but this is a 196 point move down. Okay, and we know when we have something that's over about 100 points to 200 points that we're looking for the first touch of the eagle to short. So we're almost all the time looking after a 100 plus point move to be considering doing a first touch eagle short. So that's what we're getting here. So we're getting the finish of this ABC pattern. And if we already did the ABC pattern there, but let's just look at it here on this chart. If we go A, flag down, that was to that 15 line that we showed on the other chart, right? Here's 100% up here. Okay, so that's too big. Actually, I'm using the wrong spot because we have this little jaunt here, so we need to look at this. It may not be perfect, but let's just see if we get an ABC from right here. A. There we go. That's more like it. Because we actually had this little pullback here between the guns cloud, the pink portion, and the green portion. So here's our flag. A, flag down, B, C, up here to the eagle line. Points of confluence. We know we're almost always looking for a short off the ice structure. And that's what makes this discussion so important. People need to understand, okay, that we are looking at the ice structure, okay, at the same time we're going to be looking at the Isnipe, because we're using 4 components to help build our picture, because they all add to the picture. The Isnipe chart, the ice structure chart, the NAVDAR timing cycle, and then we look at our special readings of the book map order flow, that we employ within our toolbox here. So all of this together helps build the pattern to answer the question of what you're talking about over here on making a decision of what we think is going to happen in the future over here. Wycoff Spring out. We have time left on the clock to come fill the cycle rotation. We got a little ABC move. We see the ABC move here on structure here. We just showed you the ABC pattern on the I structure chart as well. So this ABC here matched the ABC on the other side. And then we have points of confluence with the eagle and the ITS 60 line all right here at the AM high.
Well, and you also get the right-sided pivot as well. You notice at the top of the fractals during that AM high.
Yep.
So that's another point of confluence as well.
Yeah, for it coming back down.
Yeah.
Yep.
Mm-hmm. So, do you ever, when you're obviously like the main ITS lines, 1520s, etc. Do you, for instance, in this 7:42 to about 7:57, 8 o'clock window, where you've got the green rectangle, there's a lot of chop action in there.
Yep.
Do you ever have any strategies in trading within that range, or do you tend to try to skip that just for maybe it's probabilities of success, or just not wanting to get chopped up? Are there any strategies there?
Yeah, well, there's a NAVDAR strategy in there, okay? And we know, okay, without revealing too much on this particular topic, on this particular Isnipe discussion, that under the NAVDAR predictive price and time cycle methodology, we actually know that we have a counter trend window in this particular time frame. Okay, so we actually know from our NAVDAR experience that we have a counter trend low, high to low occurring in this window, where we will then finish the cycle to the AM high. So if you just recall from some of the stuff that we've talked about before, we have the game plan that it was going to come up. We had the little period of counter trend time frame in within our cycle, and then we knew we were going to finish our move to the AM high inside of that window. So that timing cycle, predictive, we already know ahead of time that specific time frame window that we're looking at. We don't know the exact prices it's going to go to, but that's exactly why we have iStructure and iSnipe charts to help us. And then we take a look at what we just did, which was the technical analysis of a flagging down pattern, a basing up with an inverted head and shoulders into a Wycoff Spring to finish the move. Okay, so we are coming out of our NAVDAR counter trend down cycle to finish the up cycle that we're in. Does that make sense?
Yeah, it does.
That is the beauty of the NAVDAR system. The NAVDAR system told us we were going to have an AM high in this time frame. It told us that we were going to have a counter trend window. We don't have to trade the counter trend window. We just let it finish. Or we take, what is this? It's 12 minutes after. What is this trade right here? This is the first touch of the 20. First touch of the 20 takes us in our counter trend window, right, to the opposite 4 for 13 points, to the opposite 6 for 18 points, to the opposite 10 for 30 points. So we could have just collected structure to structure based off our very conservative approach. First touch of the 20, target 1, target 2, target 3, or hold it and let it run. If you saw these develop after we take this and we cross to 4, what do? We bring it to stops to break even. As it crosses the 6, we take our stop and we bring it to trail the following 6. So you could have actually made money down to here or to here depending on your game plan. So you can see how the...
So that's another way that you could look at it, is if you go to, you take the 20, hit your target at 4, hit your target at 6, instead of just, obviously get it at least to break even, but as it continues in its trend, you could start trailing that down to the 6 and just let that run.
Exactly.
Okay.
At a minimum, you would have gotten 15 points here, right? At a minimum. Or you hold it till it gets to the third target, which is, you have the counter trend window within NAVDAR. We're taking the first touch of the 20s. We know Okay, that the first touches of the 20s and the 31s almost always, like a 90% win rate going to the third line, 4, 6, and 10. They just do. The 20s and the 31s are the two biggest lines that do that. So we have so much confluence here to do that and to make our target at a minimum, 4, 6, and then 10. Then what you do is you take that profit and you let it finish this little maneuver, and then you wait to see something that wants to get us back in.
Yeah, absolutely. Yeah, I know when we, I think it was, Tuesday, I believe, this week, we had a really great bounce trade. I think it was around a 20 or 31 ATR. And if you would have trailed it at the 6 ATR, I think you would have gotten almost 100, 85 to 100 points at least, just with the remaining contracts that he had. So, yeah, that was going to be one of my major questions was how do you know, or what's the strategy built around catching a trend early so you can stay in it? So that definitely answers that question.
Yeah, I think I showed, trying to remember when Rich came in today, but I showed him an example. Might have been this one right here. I'm pretty sure it was this when I was showing him how the lines go vertical. But you can see that we get this sharp move down. This does not start horizontal. This starts going vertical. This one starts going vertical. This is an impulse move down. And if you were to do the first pull back to the 4, right? Just the first pull back off of the impulse move. And again, this is getting advanced, right? This is getting to where you can see things happen fast, but you see the impulse move down. You see the quick first touch close to the 4. It's not quite, but again, this is an advanced discussion. And then it just, finishes this huge impulse move down. You don't get the first touch of the 6, but let's say you're able to see this impulse move with this going vertical, and you got in here, then goodness gracious, and you just trailed the following 6, right? You could have gotten in here and never seen heat until right there. That's a 31 point move. If you trailed and you got in and you used a 10 to 12 point stop, right, above price or above the next line because you're looking for a first touch of the 6, chances are you're going to get a first touch of 6. So if you would have left it up here at 10, 12 points, right, which is basically following the pink line, then you could have followed it all the way down into this area somewhere, and that's a 50 point move. If you didn't get in until the first 6 and you took this trade and you took it to the opposite 4, the opposite 10, 2 lines, you're getting a 20 point move there. But yeah, some of these moves today, there was a couple of them where it went, over 100 points. So you're right. That is something to be looking at. I'm trying to look at the first one, but I think it was before 7, so I don't like using those examples. But you can use this example right here. Here again, right after 7 o'clock, right on our move up to start going from this bill to the AM high, we have a vertical 4 and 6. You take the first pullback, right, to the impulse move, first touch of the 4 after you see these both develop going vertically, or you wait to the first pullback of the 6. Okay, either way, you're going to be making a buku amount of points. Let's just say you did it to the first 6 because you're being conservative. All right, then you trail your stop either below the 6 or you flow it below the 10. So it's kind of your call, but depending on where you laid out, that according to our game plan, we're going to leg out some of this at this line and this line, and we know we're going to reverse here a little bit. So the chances are we're probably going to leg out of this all the way because it's a 45. That's pretty high, and then we're going to make a decision to take the next 15 or whatever, or we're going to sell that one short itself. So again, it just depends. But let's just say you did that one right there. That's a 63 point move, and all you had to do was after you cross one of the opposite lines, move your stop to break even, and follow the 6 line all the way up, I mean, you're golden. It's money in the bank.
Yeah, that's perfect.
All right, I'm going to stop this recording. Do you have another quick question for the recording?
No, we're good.
Okay, let me just stop this. You guys have a good night. It's a 40-minute discussion. We'll put this into the private YouTube channel for those of you that are members. All right, crash out.